Hello, it is April 28th, 2018, and we're taking a look at the S&P 500 as we head into May week 1 and April 30th, the final trading day for April 2018. So this is the S&P 500 chart in 15-minute time frame, and this is the whole month of April laid out here. And I've marked off where the 20-day, the 10-day, and the 50-day simple moving averages are at right now. You can't use your simple moving average lines on an intraday chart because those don't represent the daily simple moving average. You can only get that off of a daily time frame chart. So when I'm looking at an intraday time frame, you'll see whenever I post one that I have the lines manually plotted on there where the 50 and the 10 and the 20 day and so forth are at. So here is our whole month, the way that it happened. We came in at the beginning of April and we set our low for the month and the quarter on the very first trading day. And here in the middle of week 3 on the 18th, we set our high for the month at 27.1749. We sold off a little over 100 points in 1 week to the middle of this week that we just went through, down to 26.12. And 26.12 rhymes with this level that we kind of dipped down here to after the first run that we put in on the month. We dipped down here on the 9th to this same level that we seem to have come back and back tested last week. Our 200-day simple moving average is right down here. I'll go ahead and just throw a price level in there while we're talking. That's like at about 26.08 right now and rising. It's rising right up into that 26.12 level. I'm just going to call it 26.10 for now. It's rising right up into that 26.12 level this week, and it's going to actually, rise above that low that we set. So if we come back to that level one more time and break it, you know that we're also breaking the 200-day simple moving average. And underneath us, the 200-day simple moving average has been sort of a safety net underneath the market. And when that goes, things start to get, there's usually some sort of bit of news or something going on that's really pushing us lower. And people really start to lose their minds when that 200-day simple moving average goes down. Anyway, so we are in, for all intents and purposes, one way to look at this is that we're in this rising channel that you can see between these green lines, and this gray dashed line down the middle represents a price channel that we've been in. But you can also very clearly see, at least this is what's really getting my eye, is this head and shoulders pattern. This is formed out of our low, and we had a breakout up to 27.17, and we've broken down, and right now we're right back to where the shoulder is forming here at 26.75, and where the 10-day simple moving average is at. So unless we can break out above here and work our way up higher and take out the head of this and make a higher high pretty soon, work our way up to tagging the top of this channel as a target, and that would take us up to the 27.50 mark and fill in some gaps and stuff that we know that we have from the daily roadmap that need to be taken care of. We filled one gap with this run here, but we have another gap above it all the way up at 27.52 that needs taken care of, and that would be targeting the top of this channel. If we don't do that, then we stand the chance of breaking the bottom of this channel and going ahead and fulfilling this head and shoulders pattern. And the way that I always just do a quick targeting for these is that I draw a downtrend from the top of the left shoulder through the bottom of the right shoulder. I try to find a very obvious point that price has dipped to on the right side of the pattern, and I draw a trend line through it from the top of that shoulder to the bottom of that, and I look for that to be targeted in the breakdown. And sometimes we thrash through this and go even lower. Sometimes though what we do is just do an intraday break of it, but we end up coming back and closing above it. So it's not a tried and true absolute target. It just gives you something to sort of shoot against and gives you some kind of an idea, especially when you're working with options. So if we were to do this, say sometime this week, we're going to be coming down and testing 25.80. That means we're going to be breaking the 200-day simple moving average. And there's all that talk and chatter around CNBC and Twitter and everything about going down to 25.75. And that would take until, we'd have to go off the side of the chart here, but maybe this chart only goes, I only have the time extended out through the 4th of May here. But to get down to 25.75 with this as a target, that would be like next Friday, if it were to be using this line as a target. So that just gives you sort of an idea of what's been going on this month and what needs to get done. Either we're going to break on up through the 50-day and up towards the top of this channel, or we're going to fail again, come down here and either hold the bottom of this channel around 26.25 or so and rising, making a higher low against the one we made last week, or we break this channel and our last chance to be saved is to just do a much closer back test of this 26.12 that we set this week and bounce off of the 200-day simple moving average again and then go back up. Or we're going to just completely, break down and go after this trend line, or, go even lower still. Just because there's a trend line doesn't mean it's going to hold. Trends are there to form a trend. And when a trend breaks, it's just telling you that a trend is broken. That's all it means. So I kind of look at channels and trend lines as guides, not as tried and true targets. So hope that makes sense. One other thing I wanted to bring up and show is this other chart that I've created to try and talk about these iron condors that I was talking a lot about on Friday, and that I talked about on Twitter today, but over on the public account, the Kiwi Trader 24 account. This is going back to the daily view, and these boxes each represent a week of trading. Here was week 4, the week we just traded. Here was monthly OPEX week 3. Here was week 2, and then here was week 1. And you can see that week 1, we really worked a very, very wide range in price, and we worked between maybe a 26.75 call and a 25.50 put. And I talk about this all the time, that funds come in and they go out and they'll buy puts and calls at strikes every 25 points. And depending on whatever system they use to judge whether they're buying calls or puts, maybe, in my opinion, since the halfway point for our month right now is 26.35, maybe they're buying calls, up above the 26.35 level, and they're buying puts down below the 26.35 level. So that's yet another use for your halfway back, depending on what it is you're judging the halfway back of, and if it's of this this whole month that we've traded. This 26.35 can sort of give you a good idea of maybe you want to look at your puts starting at 26.25 on down, and you could be looking at your calls from 26.50 on up. But in any case, they go out and they'll buy like the 25.50 puts, the 25.75s, the 2600s, the 26.25s, and then they'll go and they'll buy the 26.50 calls, 26.75, 2700, 27.25. And when the market gets up to these points, they'll be selling, $5, $10, $15, $20, spreads against it, and collecting that credit. If the market doesn't have enough juice to move on up through their long strike. And they could care less whether they get that payday on that long option, because they make a lot of money, standing in the way and blocking price by going out to the futures and selling or buying ES to push the price up or push the price down to save their trade for the day, using all those interweek expirations on Monday and Wednesday and so forth. So here for the month of, for the first week, you can see, maybe they were long these 25.50 puts, and, maybe, you can see how things really got saved here at the 25.75 strike. There was never any closes below 25.75. So maybe they were long these 25.50s, cashed those in, and then as we moved up above 25.75, or maybe when they were down here, they cashed in these 25.50s, and then they sell when the price is all the way down here. I'm totally serious. They can do this because they've got the money and they've got the control to do this. Cash in this 25.50, they're still long their 25.75. but they'll, instead of cashing out that 25.75, they'll sell like the 26, they'll sell like the 25.80 put against it, because they know that the plan is to push price up here, and they'll get much more money for it than they will just cashing in their 25.75 long. They can sell a credit against it, have it, and then if we go up and come back down like you see here in this final day of the week, they're making money both ways. So think about that. I'm hoping that a chart like this will actually help you see how they box prices in, and they maybe set up an iron condor for themselves. An iron condor is where they're selling short put spreads and they're selling short call spreads. So they're trying to keep price below a certain level and above a certain level, and they make all their money as long as price just sort of vacillates between the two. And once they have that short strike in front of their long strike, they could care less if it just grinds away and hovers back and forth and goes up and down, because the more vacillation of price, the faster that premium comes out of their option. And then they can cash it in and keep moving down and rolling down a strike on their short. So I hope this makes sense. If it doesn't and you have any questions, please let me know. I don't want to confuse you. I want to help you. I want to give you some tools that'll make you better understand what's going on with the S&P 500. And on this chart, like I said, I put in all these strikes so you can sort of understand where price is topping out at what strike. And I put in these little gray sublines for possible short strikes that maybe that they're working to short against their long strikes. And then in here you have your simple moving averages. And this is a daily chart, so these are your actual, your actual reads. Here's your 100-day, your 50-day, your 10-day, your 20-day, and your 200-day. And if you haven't noticed by now, anytime I post a chart, the 200-day and the 50-day are always this light blue and this pink set of lines. And the 10 and the 20-day is always this orange and this dark blue set of lines. And then the 100-day is this oddball color, yellow, out here. So that's it. I hope this was helpful, not confusing. And if you have any questions about iron condors or about selling call spreads or selling put spreads, be it on the S&P 500 or on Amazon or Google, and I can certainly do up one of these charts for, if you guys like this sort of thing, I can do up one of these for Amazon and Apple and so on and so forth, so you can sort of see this kind of price manipulation on those individual names as well. That's it. Have a good rest of your weekend. Good luck and good trading.